What's up everybody, welcome to the Stocks channel. My name is Cory and today the S&P 500 closed at a brand new 52-week closing low as we're going into the CPI data release tomorrow morning. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's SPY was down 0.34% and we did get that new closing low below SPY 357, so we are starting to see that final leg lower. And if you go back to my Monday video, I do believe we are finishing out 5 waves in wave 3, which does mean we are very likely going to be due for a bounce once we hit the next price target. Right now, that next price target, while SPY is below 358, is down here at 350, but there is no guarantee that we will go all the way down to 350, and we already have satisfied the requirements to break down in the wave 5 below the low of the wave 3 in the wave 3 of the wave 3. So if you don't know Elliott wave talk, just completely ignore what I just said, but if you do understand Elliott wave, it does appear this 5 waves for wave 3 could be coming to a close, so we will be expecting a very strong counter trend rally once we're done going lower, and that is why I don't think there's a great risk reward ratio to continue to short at these lows. I do believe it's much better to look for a reversal and then look for long trades, because we will have a lot more upside, especially to fill that gap right just below 373 on SPY. So I do think we're getting very close to a counter trend rally in the markets across the indices, and that's why we are seeing the markets breaking down to new lows. Of course, this is still a downtrend until it's not, so we're expecting lower highs and lower lows until we break the downtrend, which will require confirmation in the price action. I still view this as a trading range between about 357 all the way up to about 378. So the bulls will need to break all the way back over 378 on SPY to start reversing this strong downtrend, and that is a long ways away. So there is no reason to get FOMO on the bull side. Wait for confirmation of a trend reversal, and then you can start looking to add in on dips if we do indeed get a trend reversal. The bears have full control of this market with a strong downtrend and very weak price action, so the bears will continue to show up at resistance levels. On the Nasdaq 100 triple Qs, we were down 0.03% today, so we went absolutely nowhere, and as you can see, the triple Qs also look like they're finishing out the wave 5 of this wave 3 lower, with the downside price target still very close and well within reach at 258. There's no guarantee we have to get to 258, so if we do start to get a bounce back over 267, we will be looking for that counter trend back up to fill the gap right around 280. Above 280, we still need to break that critical resistance at 284, and this is a downtrend of lower highs and lower lows until the triple Qs can get all the way back over 284. Yes, we can continue to go lower and we can slice right through that price target at 258, so do continue to respect the strong downtrend until we get confirmation of the reversal. On the Dow Jones, we were down 0.04%, so we also went absolutely nowhere in the Dow, and we failed to break back over the resistance just above 293, and we still have the elephant in the room of the weekly gap at 285. If we fill the gap and continue lower, we have price targets at 281.85 and 276, and the upside resistance will be that gap fill right around 299 and the resistance trend line at 303. The bulls need to get all the way back over 303, and if they can do so without taking out the low at 287, that will look like a higher low, higher high, and that will start looking like price action that could be reversing the downtrend. So this could be a critical support zone right around 291, so watch that level as well. On the Russell 2000 IWM ETF, we were down 0.27% today, failing to break above the resistance at 168 and still not breaking down below the June lows or the September lows, so we are still seeing relative strength in the small caps. If the small caps can hold above the low at 163 and then break all the way back over 176, it will look like a higher low, higher high, and that could be enough price action to tell us the downtrend is ending. Critical support levels are down here at 163.75, and if we break that, look for the next leg lower at 159.5. To the upside, we have that strong resistance at the gap fill and the resistance trend line at 173. On the ARKK ETF, we are up 1.32% today, and ARKK did break the June lows and the May lows with yesterday and today's price action, which was that breakdown below 35.10. On a breakdown below those lows, we're looking for the next leg lower at 33.7. And as you can tell, we are still in a very strong downtrend with the critical resistance being up here right around 38 to about 40, and the previous daily high that we need to break is just below 41. On the VIX, we were down 0.21% as the VIX continues to make higher lows and higher highs, so we still have the VIX in a bull trend, which is still telling us this is a very volatile market. I will remind you that volatility does work in both directions, so don't just assume we have to go lower because the VIX is above 30. and the bulls can use the VIX to crush it down to start developing a bull trend, but the bulls won't start getting confident until the VIX can start breaking all the way back down below 28 to reverse the uptrend in the VIX. On Bitcoin, we're currently up 0.46%, and Bitcoin continues to bounce off of that very strong support at 19,000, which if I zoom out, you can see has been holding up all the way back since June. So whether or not we break this support is to be determined, but there is definitely a lot of demand at this level, and that is why we simply cannot break down below it. If we break down below 19,000, we'll be looking for the next leg lower at 17,000. And if we break resistance at 20,000, we'll be looking for the next leg higher at 22,000. On Amazon, we were up 0.61%, and we can see Amazon did close below the support at 113 yesterday. And today it's using that level as resistance, which is definitely bearish and telling us we could go lower to 106 and then 102. If we break back over 113, look for strong resistance right around 117 and the gap fill around 120. And we need to get all the way back over 121 to make a new daily high. On Microsoft stock, we were up 0.15% today, and we see Microsoft continuing to break down with the third day in a row trading near the lower Bollinger Band and down below that support zone right around 226. The next price target to the downside is right around 222, and as you could tell, Microsoft is a leading indicator, has already made the next leg lower, and this does look like Microsoft is going to be due for a bounce in the very near future. So for that reason, I would say Microsoft could bounce all the way back up from this support right around 222 to 220, all the way back up to fill the gap right around 244. So this will very likely lead to a counter trend rally in the indices as well, because Microsoft has been a great leading indicator. On Nvidia, we were down 0.74%, and Nvidia is breaking down below 116, and it's risk off until we get back over 122, because that is a very critical breakdown in this stock that could send us into capitulation. If Nvidia breaks back over 122, we'll then need to break the previous daily high, which is right around 133, and then we'll have strong resistance at 135 before we can go fill the gap at 142. On Tesla stock, we're up 0.34% as Tesla has continued to trend lower ever since we broke down through the double top price target at 231. And the very critical support to hold is right here, right around 209. And if we start breaking 209, you will see capitulation in Tesla stock. This stock is a retail favorite, and there's a lot of diamond hands retailers in this stock, but I assure you eventually they are going to give up if we see Tesla continuing to go lower, and you will see full-blown capitulation. However, this is also a great opportunity for a long trade right here, right around the zone at 209 to about 213. So don't be afraid to take on long risk. You just need to exit if we start breaking substantially down below 209. To the upside, look for resistance at 219 and 231, and that gap fill just above 235. On Apple stock, we were down 0.46% as Apple is right back down to the previous daily low of support at 138. And if that level fails, we'll make a new daily low, and the next support zone will be 136 and the gap fill at 133, and then retesting the June lows at 130. To the upside, if we get a bounce, look for the gap fill at 145, and the strongest resistance that we need to break is still 147. On the financials, we were down 0.23% as the financials are trending back down towards $30 and making another closing daily low. The industrials were down 0.78%, breaking down below the support at 85 and trending down towards that gap fill, which is right around 81, which is also hand in hand with the Dow Jones gap that still hasn't filled. The healthcare sector was down 0.49%, coming back down towards support at 121, and below that we're going to be retesting the June closing lows at 120. The energy sector was up 0.81%, getting a bounce off of the 13 EMA of support right around 78, and we still have that strong resistance zone we need to break right around 83. If we break down below critical support at 76, look for the gap fill below at 73. So jump it back over to the S&P 500. Tomorrow is going to be a very critical catalyst with the CPI data, and that could send us down to 350 on SPY or up into our counter trend rally to fill the gap right around 373. So be prepared for any scenario and let the price action do all the talking, because right now we are in a strong downtrend. So we need to wait for a trend reversal before we can say the downtrend is ending, and then you can start getting more bullish. If you're getting bullish at this point, it's only because you're an investor accumulating for the long term and you don't mind holding for 12 months or longer. But as a trader, you need to respect the strong downtrend and the fact that we still have outstanding price targets to the downside. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and send you all of your buy and sell alerts directly via email and text message. You can find out more about Bank and learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.